My next guest says stocks have risen in June for the right reasons, softer than expected inflation, and he is seeing more positive signs ahead, and he's sticking with the big names in AI. Tom Lee is here. He's Fundstrat Global Advisors co-founder, managing partner, and head of research, and he's a CNBC contributor. It's great to see you.
Yeah.
I want to start in a little bit different way than normal because Doug just made a really interesting point about millennials and how they're so conservative in their positions. And whether you've experienced this phenomenon firsthand or not, what do you say to those who need to be coaxed into a market that is ever at record highs after a run in stocks like NVIDIA, like we've rarely before seen? I mean, is the water still safe?
You know, I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyways. And I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up. So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, I'm sure you've seen it, that says, oh, we're going to have permanently lower stock returns now. 4% a year is the most you should expect and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right.
And stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
Mm-hmm.
Over the past year, NVIDIA stock is up more than 200%. Many analysts attribute this to the company's more than impressive earnings. In fact, NVIDIA's trailing 12-month sales more than tripled from a low of $26 billion to almost $80 billion. What's even better is that revenue estimates continue to skyrocket. For NVIDIA's current fiscal year, analysts expect $120 billion in sales, while estimates rise to $160 billion the following year. In other words, Wall Street expects NVIDIA's 2026 sales total to be roughly 6 times its 2022 total. And one big name on Wall Street that recently talked about how bullish they are on NVIDIA stock is UBS. In its newest report, the investment bank discussed different layers of the AI value chain and talked about a $300 billion opportunity for NVIDIA that makes the stock a no-brainer buy right now. So, in today's video, we're going to uncover this opportunity and talk about whether investors should continue buying NVIDIA on the dip. But before we do that, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
So is NVIDIA the thing that you look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
You know, there's a lot of people trying to top tick NVIDIA, you know, saying that they don't want to own it because it's expensive, but it's a 30 PE stock that sells something that no one else actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if if we were discounting NVIDIA being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped. But because everyone wants to sell NVIDIA and try to call a top, I actually think there's still a lot of upside.
When I hear anecdotes, like I heard at a fundraising thing the other night about how all the local kids own NVIDIA, what should I think when I hear that kind of information?
Well, you know, makes sense. I mean, NVIDIA is the largest stock, so I mean, everyone should own it. It's almost like if someone said, I'm selling because everyone owns the S&P. I mean, everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down. And I only hear people saying the S&P's topping right now.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction. I think we've had a couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, you know, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
I mean, to an extent, I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise rates.
In their latest report, UBS analysts talked about the AI value chain, estimating that the combined market value opportunity from its different layers will hit $1.2 trillion by 2027. Here's how this works. The analysts segment the AI market into 3 layers, called the enabling layer, intelligence layer, and application layer. The enabling layer is what actually powers the AI ecosystem. Think about things like infrastructure, GPUs, data centers, cloud, and servers. UBS then divided this layer into 2 segments, infrastructure and cloud, and said that it sees a combined $516 billion revenue opportunity from the enabling layer by 2027. Moving on to the intelligence layer, which acts as the brain of the entire AI ecosystem. It includes technologies like large language models and backed software systems, and this layer presents a $225 billion opportunity by 2027. Finally, the third layer, the application layer, is where the end user comes in. The analysts stressed that cloud, data centers, GPUs, large language models, and algorithms amount to nothing if the end user can't benefit from their huge processing power. They also said that estimating the opportunity of this layer was the hardest since it's still in its very early stage, but they expect a whopping $395 billion in revenue opportunities for the layer by 2027. But what does this mean for NVIDIA? And how can investors capitalize on these estimates? Let's find out. Hello, everyone, and welcome back to Investocracy.
Okay, so talk to me about the sort of CapEx piece of your note here. You talk about AI CapEx potentially leading to an increase in overall inflation. Can you explain that pipeline for me?
Indeed, what is happening right now is that companies are coming out of the pandemic with quite strong balance sheets, and their ability to generate free cash flow has been very, very impressive. And that's also in part why we're positive on the US equity market more broadly. And the ability for then companies to spend in AI infrastructure build out data center is why this is actually a very, very important theme as we think about the next leg to play the AI theme. And the AI build out has 2 implications. Number one, it actually can be inflationary, right? And I think that was underappreciated at the beginning of the AI boom, because people are automatically thinking, okay, AI leads to productivity boom, and that could be deflationary. But before we even entertain the possibility of productivity boom, we have to go through the CapEx build out phase. That in the context of supply constraints, also with the low carbon transition, competing for some of the same resources can be inflationary. But a second implication of this is that it actually spells great opportunities for infrastructure, for example, and private market that allow us exposures to the early journey of some of these AI beneficiaries. So we are very positive on infrastructure and also related sectors. You talked about industrials earlier, but also materials and energy are likely beneficiaries of this transition and of this build out that we are expecting.
According to UBS, NVIDIA is well positioned to benefit from the $331 billion market opportunity in the AI enabling layer, thanks to its cutting-edge GPUs. In the cloud segment of this layer, UBS thinks NVIDIA's DGX offering makes the company a promising player. This supercomputing service gives enterprises access to the software required to train advanced models for generative AI through the use of general-purpose computing on GPUs, which adds to NVIDIA's ecosystem aspect, as it provides both the hardware and the software for AI. Meanwhile, on the intelligence and application layers of the AI value chain, UBS sees no near-term catalyst for NVIDIA stock. Still, the analysts note that NVIDIA's latest product announcements and its plans, revealed at the Computex 2024, show that the company has a lot more to offer to power its growth. They also like the company's shift to its new Rubin AI architecture and think that its powerful H100 and Blackwell chips easily beat competitors. All of NVIDIA's upcoming products provide growth catalysts for NVIDIA stock and justify its PE multiple of 71, given the company's growth expectation of over 100% this year and 32% next year, according to the analysts. Also, based on the 2026 EPS estimates set by Wall Street, NVIDIA is trading at a forward PE multiple of 35.74, which makes the stock's valuation attractive given the growth catalysts it has. This is one of the many reasons why the investment bank thinks Nvidia stock is still strong. But there are also the bank's key AI predictions. The firm's analysts believe the race to achieve artificial general intelligence, or AGI, could give rise to a capex cycle that could inflate AI investment. UBS also sees the dominance of a few companies in the AI industry will continue to be a reality moving forward, as it expects monolithic players and AI foundries prevailing in the near future. With all of this in mind, is Nvidia stock a buy now? Let's get right into it. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
What do you think about the AI stocks in general? We were talking about this huge run-up we've seen, maybe a pullback this week.
Yes.
But what do you see when you're looking at those trends?
To me, it's still just looking from inside out, looking at how few actual commercial applications we've had of some of this technology. I think the infrastructure still has a long way to go. So when I look at things like NVIDIA, cloud compute stocks and so on, it really feels like we're trying to do streaming in the mid-1990s when the infrastructure wasn't even ready to actually completely take advantage of it. So I think there's going to be a lot more demand for all of this.
I mean, you're talking back 20 years. How quickly is that infrastructure going to be built up at this point? There's billions and billions and billions of dollars being spent.
Yeah, and you're seeing demand, obviously, for chips, but I think what you're then also going to start seeing is a lot more demand for compute when a lot of these applications start to be used by large financial institutions, by hedge funds, and so on. I think demand for that is going to absolutely skyrocket.
No one can deny that Nvidia's recent rise will go down in history. For a brief moment, the company even surpassed Apple and Microsoft and became the world's most valuable company, with its market cap topping $3.4 trillion. But a sell-off happened recently as investors started taking profits, and many started wondering if Nvidia's rally can even go on anymore. The main question here is, can a stock that has already soared more than 10 times in less than 2 years really be a smart, long-term investment? To answer this question, we have to look at Nvidia's numbers, and spoiler alert, they're eye-popping. We already talked about how the company managed to nearly triple its revenue, but we must focus on the company's data center segment, where it reports its GPU sales. The company's data center revenue soared 427% from a year ago to $22.6 billion in Q1, and with Nvidia's growth, investors have benefited, with the stock more than tripling over the past year. Also, the global data center market is expected to increase to a valuation of $622 billion by 2030 from $301 billion in 2023, and Nvidia is best positioned to capitalize on this. Keep in mind that the reason the company's sales are soaring is because Nvidia's products are the most sought-after hardware globally. They are helping shape the cutting-edge technology that is powering the AI revolution. So, if you believe that AI is the technology that will dominate the next 10 to 20 years, investing in Nvidia today, even with the valuation that many consider too high, still makes sense. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.